If you still find yourself being hit and then the market goes into your direction, if you still find yourself not taking profits, the market gives you some pips but you don't take profits, and then the market takes you out eventually, worst case scenario, you blow your account. Well, we are here to discuss why the stop loss and take profit is as important as your entry point. Many of us are looking into entries only, but you don't mind the stop loss, the take profit. Many of us will be already making money. Actually, most of you are already profitable, but because you don't take stop loss and take profit serious, you're still looking for account managers and signals and also strategies. Strategy is not something that if you know you're going to make money. There are also things that add up to make a strategy. So you have to take everything serious. Just like how you know where you want to enter from, you should also be curious, where should I really put my stop loss? What is the right stop loss for me to use? What time frame should I use? Hello traders, Forex Uganda. We are here with yet another brand new video. Make sure you subscribe, like, turn on that notification bell, as we are going to be unleashing a lot of market secrets and content. Share, like, subscribe. Let's dive into today's video. So, depending on the strategy you use, we all know we all depend on what we call structure. So if we talk about structure, we are talking about market making, let's say lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So it doesn't matter where you enter from, but what matters, what do you consider? Where do you consider to put your stop loss? You're going to find that many of the traders are dwelled in entries, but forgetting that also where you put your stop loss matters. You find yourself getting trades, taking a very good trade. You take a long, but then put a very small stop loss. Because you said, me, I use a stop loss of 10 pips. I use a stop loss of 5 pips. I use a stop loss of 100 pips. There is no right and wrong stop loss, but structure is your boss. The market is your boss. You can't command your boss that today I'm not going to work. It is the boss to tell you, do you know what? Tomorrow you're off. Today you're working 2 shifts. So this is the idea with the market. If you enter the market, make sure you have reasons of entry. That is number one. But you should also have reasons of why you're putting your stop loss at that price where you're considering your stop loss. Not just fidgeting with the entry, taking the entry, but then you're like, I think I should put the stop loss here. I think I should put my stop loss here. I think I should put my stop loss here. Or stop loss is scam. You say, me, I will not put a stop loss. Well, when we are using the BYBT strategy, for us, we want to look at structure. We want to look at previous points of interest as our support. So in case I've taken this as my entry here, I take this as a buy. Okay? I'll not say, do you know what? I'm going to put my stop loss here. Obviously, I'm going to consider this as my previous support zone. Okay, remember the support zone is not just at a single price. Okay, that's why sometimes you see us drawing with this rectangle. So we are considering this as all being a support zone that can push this market back to the upside. So we always want to put our stop loss not in the support zone, but below. So you see, we are. I'm also giving it some below the wicks. Even below the wicks, I'm giving it some more pips. So instead of you saying, you know what, this stop loss is big, let me reduce it and put it there. Instead of reducing the stop loss, reduce your lot size. Because what is going to make you reduce the stop loss is just seeing that you're going to lose big. So you're going to go against your boss. Your boss is telling you, I can come back and actually look for support in this zone. So for you, like, boss, me, I want money and I don't want to lose. So you find yourself being hit, and then the market continues into your direction. So always have a reason why you put that stop loss at that price, but also don't put a stop loss that you want. Put a stop loss that structure has told you to put. We always advise our traders to use the stop losses according to structure, below support, above anything above support could be a stop out, and then the market continues. So you start blaming the market. These market makers are really making a stop loss hunt. Why are they hunting you only? Every time they're hunting you, every time they're hurting you, and funny enough, you find that you only have $10, $30 in your account, but you're like, the market makers are hunting me. The fact is, stop blaming the market. Put the blame on yourself. Identify the real problem. Fix the problem accordingly. You will make money. So when we look at the take profit, then we always know, or we all know, that when the market is moving, let's say in a downtrend, it creates an impulse, retest, impulse. The concept is every after pullback, we expect the market to create a new lower low. So when we are looking at our take profits, we are going to skip this previous lower low and expect the market to create a new lower low. So we are going to look in the previous data aside and see, is there a resistance? What is the next resistance besides this one? And that is the stop loss, that is the take profit we are going to use. What I'm showing you is the is how we do it. Okay, the BYBT strategy. So let's say if I take my trade here, okay, I'm not going to say this market is going to go up to this way. Yes, it has potential, but do you even have the heart to hold up to this way? So I'm going to say, okay, this is the previous high the market created. Remember, my stop loss is below support zone. Then I'm going to come in my previous data. So this is a high, low. We anticipate a new high. So what is going to happen here is I'm going to look besides. Okay. So after the market takes out to this high, we expect at least this market to find the first take profit at this price. What we are showing you here is people that use, it is very good for you to use your time frame of entry for your stop loss and take profit. It really doesn't make sense for you to get an entry on 30 minutes, then you go on the daily time frame for you to look for take profits. You've used the things of 30 minutes to get the entry. That means that is the same time frame you should use to put your stop loss and take profit, to avoid things of being stopped out and also not taking profits. They give you profits, the market moves, but then you don't take anything and the market reverses on you. Then you say, I'm being bewitched. I think I'll never make it. Traders, we shall all make it. We all just have to keep things simple. Keep things simple and principled. Things simple and principled. We shall be our best traders by force. Thank you for watching. #Forex Uganda once again. Let us meet in the next video. Remember to subscribe, turn on the notification bell,